Good morning, everyone. Welcome to our Thursday morning session. The market just opened up. Hopefully, it will be a little bit more cooperative than it has been the last few days. All right. Okay. For those of you who are new in the room this morning, welcome. What you're looking at here is the diversified trading system. I've got my Hawk Scalper in the top left corner, my Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. This is the NASDAQ that you're looking at, and I'm also running soybeans and crude oil on my other chart. Of course, I can take a look at any market which is of interest to you. Let's start with the NQ, see where we've been, where we might be going. A little bit more activity in the overnight, and it looks like we might even have something resembling a trend. See how well they stayed on this trend line. It's breaking down a little bit, which maybe that was just an exception there. Okay, so it does look as though they're starting to leak through the trend line a little bit of a rally in the overnight. Of course, the NQ and the stock market seem to be at odds again with each other. So we would have ended trading somewhere around here, around 44.45 yesterday, and our open is up here around 44.53, 54. So this is going to look like a little bit of an opening gap. And it does look as though they're trying to get in there. We've got an early trend change signal, and I'm going to show you something here in just a second. Let's dial this down. I'm dialing down my risk amount, and I'm going to take advantage of these lows right here and cover above the highs. Oops, wrong button. Okay, so we've got an early trend change signal going on here in our Falcon trader. And this is, we're just 3 minutes into the session, but the last couple of days we've been getting an early run off of that first signal. So I thought I would take a look at taking the first signal today. Here's our Hawk. You can see our Hawk very much sideways. All these yellow bars, look at our filter. That's telling you that we're in a trading range like so. Crude oil. Here's the Falcon on crude oil. Overnight decline. So this market very much in a downtrend at the moment. We are working on a possible trend change signal, but this is the Falcon, of course, but our Hawk and our Eagle are both giving us more bearish signals. In fact, we've got a sell signal right here. We've got the ATR line that we can use to try to keep this trade in sync. And it looks like with crude oil, I'm only going to be able to cover it above that high, which is unfortunate because there's always a possibility with crude that it's going to try to drift into the hard edge. And you can see that hard edge would pretty much coincide with that area of resistance. But we could try to do one of those and do a bar high low, keep it a couple bars back. This is a fairly, well, I want to say risky trade in that it's not as structured as I would normally like to see it. Like I said, there is a very real possibility that it's going to try to pull back into that hard edge, in which case we're not going to have the staying power. But I'm going with the more aggressive stop strategy that if we do get filled, maybe, I can reduce my risk exposure somewhat, get me out of harm's way. Here on the Hawk, we're looking at a red bar buy, which we can buy it. This is interesting. We had a green bar sell here fail, so we're getting a red bar buy now to the upside. So we're actually getting opposing signals on crude oil. All right, so we're long on crude right now, so I'm going to cancel the sell order in the Eagle. And it's obvious that we can roll our stop up there now. In fact, I might go with the bar high-low here also. Because, hey, this is crude. It's a very volatile market. I don't want to have too much money hanging out there. Come on, get up there. And now crude on the Falcon, working on a trend change signal. I'm not sure it's going to print here. We're still just getting the warning dot. I could set up kind of a just in case type trade above this swing high. Come on, get up there. You know you want to. This is also a late filter entry, which we've been seeing in crude oil on the trend change signals of late. It's a little bit odd, but I would very much like to tighten my entry if in fact this bar prints green and prints my hash mark. Because you can see the entry is going to come at 51.23. I'm 8 ticks away before I get my other entry. So I wouldn't mind getting the tighter parameters. Well, you know what? Why don't we, what I can do is I can set it up this way. I can anticipate the hash mark, wait for the hash mark to print, and they're taking their time, so I can even adjust it. Can I cover the trade down there? Ooh, I can. Fundamentally, it's a better trade. Okay, so they're waffling a little bit here. They took us out. I'm setting up now to sell the failure of the red bar buy. Remember, the red bar buy is a signal that you can take either way, and you can go back to our Eagle trade again and set that one up also. So crude oil looking very enticing at the moment. Oh, what? I thought I heard this order fill. Okay, we did get a trend change signal, and we did get slipped on our entry. Oh, by, what is that, 3 ticks? A 3-tick slip? That's annoying. A 3-tick slip tells me that there's not a lot of market participation here. So what happened is prices came down to our entry, which was right at these lows. Look at where we got filled. There were no orders in here. The next sell order was right down here where we got filled. Either that or all the sell orders disappeared. All right, let's put that away. Okay, crude oil moving away from our hawk trade. See here, you could leave this order in. Fundamentally, it is a sound order. You could leave this one just sitting here, but I'm going to cancel it. And we're coming back with our Falcon trade and same setup. And it looks like we're about to print a hash mark. We're getting the possible late filter entry signal. And this one actually has some room to move. I wonder if I should run a bigger stop on or a profit target on it. Well, I guess 51.45, 51.50 would take us back into the hard edge on the eagle. So maybe we'll just stay with that. I'm going to cancel my sell order on the eagle, speaking of which. So right now, as far as I'm concerned, it's all buyers in crude oil. The big deal is this high here at 51.30, which is also our primary support line. All right, there we go. We've got the triangle hash mark. We've got the trend change signal. We've also thrown in a late filter entry signal there just for kicks. Let's see how they do if they can get up to 51.30. The nice thing about this trade is we've got it covered at a good spot. We've got it covered right below this swing low. Come on, get up there. All right, I'm going to put that on the back burner for the moment. Soybeans, not a whole lot going on in the soybean market this morning. They were in the decline, but now they're sideways. So we're looking at a lot of ranging activity. Won't have much to do with soybeans until we can get outside of that range, I'm afraid. Same thing here with the NQ. So this was our order down here when we broke the bottom end. So far they're still holding, the sellers seem to be knocking it down a little bit earlier. That's encouraging. But they really, there we go. Now we're getting some action. Okay, and I'm going to see if I can get my 3 ticks back. No. Oh, it's going to be one of those, is it? Lots of support down here around this 44.50 area. Every time they hit it, they bounce up a bit. Hit 44.50, bounce up. 44.50, bounce up. 44.50, bounce up. So this is kind of really the last chance for the sellers. They've been waffling quite a bit here, so I'm going to try to hold my stops. But this is really their last push. If this bar here turns red, or the next bar turns red, I'm really going to start following them down very, very tight. In fact, I can get my bar high-low ready. Yeah, if they don't stop me out first, that is. Yeah, here they go. They're going to try to hit this top end of the trading range. Now, there are sellers up here, right? We have sellers who have sold here, sellers who have sold here, sellers who have sold here. It is not unreasonable to see the sellers come back. Problem is we have buyers who have bought here, buyers who have bought here, buyers who have bought here. So this is why the market is so range bound. It's very much a tug of war at this point. Okay, well, they're going to let it drift up here, are they, and then knock it down? Scoundrels. It was worth a try. You know what? It wasn't a bad trade. It was a trend change signal. Like I said, we'd broken the trend lines. We've had tested the extreme. We were testing the bottom end of the trading range. This was a tradable signal. Or, pardon me, where was it? Right around here somewhere. Well, either one. They were both tradable signals. This actually a late filter entry signal, which should have seen some follow through to it. Instead, all we got for our trouble was a bad fill and then a stop out. And I'm not even convinced that they want to go higher. After all that. Suncom is saying crude oil is showing us a second late filter entry signal. They certainly are. I hope they get their act together here. pretty quick. Like I say, 51.30, the real big obstacle. If you're looking for a safer entry, buy above 51.30, buy above this swing high right here. That is definitely the safer entry. Now with these late filter entry signals, I normally like to see some follow through after I get the signal. I'm not very impressed at the lack of upward momentum at the moment. I am covering my stops fairly deep. I am also considering rolling my stops already. Fundamentally, this, where I have my stop right now, below this swing low, is a very good spot to be, because of course there is a chance that we might see a test of the extreme and then the rally. There we go. So we've taken out 51.30. I can get a little bit more aggressive on my stop now. There could be some selling going on here. We'll take it break even +1. So at least Mr. Broker gets paid. So seeing a little bit of a reaction to the breakout now. Technically, we have hit our high probability profit target. Remember, for the Falcon, it's $100 per contract. But in a market like crude oil, I do tend to double the objective. I'm confident that it will go a little higher. Probably 51.50 seems like a reasonable target. Crude oil does like the halves and the wholes. In other words, the 50s and the double zeros. So 5100, 5150, 52 even, and so on. Yes, and Suncom says we're into the hard edge on the Eagle right now. Yes, we are. Almost holding it to the number. Almost. All right, we'll throw that one back on the shelf. Wow, can you believe the NASDAQ? Coming in with a first micro macro cross. Ay, 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 ay. All right, what's this one going to cost me to be wrong? Or maybe what I'll do is I'll take a 1Z and we'll try to add to it. Yeah, okay, I can cover that. So what we're looking at now, whenever you encounter a trade that is broken out of a range, like the NQ did, we're looking for this retest factor, right? And then we're going to get one of those. So that's what we're getting right now. Looks like there's the retest. I need to adjust my trade somewhat. And if it is in fact in rally mode today, I'll see if we can't add another one above here, above that swing high. it gets above this swing high, I'll get the trade to break even. Thanks, Floyd. Floyd says factory orders report out at 7. Okay, crude oil just hit our profit objective, which is mighty nice of them. We actually took a positive slip here in the NQ. That's odd. So whereas we tried to sell down here and we got gapped badly, here we actually got a slightly better fill. I don't know if that was my error placing where I placed the entry order. It should have been on the hash mark here, but we actually got filled at a slightly better price. Come on, get up there. Come on. Oh, there's some selling up here. 44.60. They're trying to put the brakes on. Get up there. Come on, be nice. No, they're going to try to push it down now to a macro pullback. Stinkers. Well, I was hoping this would poke up just one more bar. That would have given me a chance to get the trade to break even. Here we are now in a macro pullback position. We'll see if we can't get a bounce off of them now. Oh, and we're going right back into this trading range. Yuck. Yeah, darn yellow bars. Yes, this is going to be an unpleasant type situation. Here comes crude oil again with another sell signal here on the eagle. We'll see if we don't get this is a reaction now to the hard edge. We'll see if we don't get a second push on this bar now. And on the hawk, we're also getting a possible red bar buy, which we could set up to sell also. So we're getting a couple confirmation signals here on crude oil that, in fact, it might be getting ready to head lower. I want to see this red bar buy actually print a signal, however, before I get too serious about selling it. I want to see where those buyers are at. It should be down here somewhere, right? If we sketch a trend line in there, we've intersected the trend line. There's bound to be some sort of reaction there. And if we can get that red bar buy to print, this might be a good place to sell crude oil from. And of course, crude oil being so insanely expensive, we have to run tighter stops sometimes than what we would like to do. Okay, so there's crude oil, same thing that we're looking at here on the eagle now. Coming out of scalp mode apparently and heading into trend mode on crude oil. Well, wouldn't that be nice? And why don't we, no, you know what, I've got a decent profit target for crude oil. We'll stay with that. Again, just waiting for that second push. Show me that this bar has got some active buying behind it, and then I can sell the low of this bar. And for the moment anyways, it appears as though the buyers are digging in. Get up there a bit. Come on. Come on, you guys. Get up there. All right, let's park that for a moment. Let's see here. Okay, we've got our macro pullback signal. Not really, because we've got a couple of yellow bars mixed in here, but the concept is the same. If we see it swing here, then hopefully we will see the buyers hang tough. And here comes crude again. We've just about got them so that we know where that swing point is going to be, so we can enter below there. Can I cover above there? Ooh, I can. Not a cheap market to play. And now we're getting the red bar buy on crude, right? So we can do the same thing. If you can't do it on the eagle, you should be able to do it here on the hawk. And you could buy this, but I'm just setting up to take advantage of a possible failure. Let's get back to this one. Can I get this one to break even yet? Get up there, you scoundrels. Come on, finish that bar. There's a lot of selling up here. If we break this level, this one could go. Get up there. Come on. I'm afraid to blink. There we go. All right, so I've got the trade to break even now. If the sellers beat up on them again and push it down, well, then it's probably time to go. It's put up or shut up time for the buyers. If the buyers can't get their act together here, then I may as well take my break-even stop. Just coincidentally, we did hit our high probability profit target. All right, so now we've got two orders in play, one with a little bit of open risk and the other entry right there. There we go. Okay, I'd better get a little bit more aggressive here with my stop. All right, come on NQ, let's go. Parabolics are still way back there. ATR, a little bit better. I want to get my stop up. You know what? Why don't I just roll it? I will roll my stop right there. So now I'm break even on both trades. And yes, that is a little bit more aggressive. Well, actually, you know what? I should do it. You see, you know how I always tell you guys you learn more about yourself as a trader than anything else you can do? Well, unfortunately for me, you guys get to see my my weakness as a trader is I tweak too much. I tweak a trade far too much. I should just leave it alone. It's one thing when I do it in private, but it's another thing when I have other people watching. Okay, I promise I won't touch it. I've got bar high low in. It's a very aggressive strategy anyway. I've only got $35 in open risk. We need to see these buyers step up now. There they go. See, now if I had gotten too cute, there was a real risk that I would have stopped myself out at break even before the market even tried to put in a rally. Yeah, Dustin makes a comment here, and it's very true. Dustin says, my thinking is that it's better to get stopped at break even while you get the chance and not at a couple of $100. Yes, that's true, but the other side of that equation is that you almost have to think of trading a little bit like a poker game, in that when you're playing cards, and I don't know if you're a card player or not, but I'm sure you're familiar with the concept. When you play cards, you have to ante, right? You have to pay your admission, so to speak. And if you don't like the cards you don't get your ante back. So when I take a trade and I put my money in, I have to be prepared to walk away from my investment. So I think the original trade looks something like this. So at this stage, I am prepared to walk away from $125 if this trade goes south on me. So they bring us in, give me a lot of heat. Now what I'm doing is I'm trying to give the market some elbow room. I'm trying to give the buyers a chance. Right? So I'm trying to hold my stops far enough away that I can see the buyers come back in and tell me where the buyers are, because I'm a buyer, right? I want to be on board with the rest of the buyers. So when the trade starts to swing like this, that tells me, okay, this is where the buyers have stepped up. So at this stage, I could start getting more aggressive with my stop. I could roll it there. It would probably take about $25, $30 out of the risk, which, is nothing to sneeze at, because remember, whatever you do in small quantities, the same will apply when you start trading larger positions. So even though it might only be $25, $30 on a single, if I was trading a 4 lot, well, that would be $100, $120, right? But the point is that now I know the buyers have stepped up. I am a buyer. I could, in theory, be more aggressive with my stop now and even roll it bar for bar. Now we encounter the sellers. So this is where the dilemma comes in. I know the sellers are here. I know there's going to be some sort of reaction to the to the buyers. I do not want to have my stop so tight at this point, break even or not, that the sellers knock me out before the market has a chance to go higher. That's the dilemma. When you encounter this situation, you need to, once again, temper your stops with letting the market sort itself out. At this stage, where we are right here, there is every reason to believe that the buyers have control of the market and that the market should continue higher. So I'm trying to give them every chance to do that. So here they go, they break through. I get a tail with a wick. Well, certainly by this stage, I would have the trade at least to break even. Right? If they break through now and do a full-on reversal, well, then it's probably best to get out anyhow. But, I'm still expecting a reaction from the sellers. I don't want my stops overly tight that I can't take advantage if this market ends up moving much higher. So it is always a balancing act. There's no question. If you're going to run your stops very tight, you can't be upset with yourself for getting stopped out early only to have the market go on without you. And I do know a fellow who runs very tight stops. He will run, I think he goes to break even at 8 ticks. So he'll give the market 8 ticks, essentially 80% of what would have been our high probability profit target. And then he will go to break even. So let's see here. Where our high probability target is. So let's say I'd set it up like this. Okay, our high probability target is above the high. So he would not be at break even yet. He would also be sweating this trade there. Right there is 8 ticks. He would now be at break even, which is pretty much what we did also. But that's what, works for him. You always need to go with what makes you the most comfortable. Because listen, I can sit here and I can tell you, things about what to anticipate with price and which signals look better than others, and that, hey, maybe it's a good idea to shoot a trend line across the bottom here, see whether we get any buying support and so on. But at the end of the day, it's your money, isn't it? And as nice a guy as I am, nobody cares about your money quite as much as you do. So always do what you think is right, with the caveat that you cannot beat yourself up if things don't go as you anticipated. In other words, if you do get stopped out at break even and the market takes off, don't beat yourself up for it. Try to learn from it. Look at it and say, next time, what could I have done to have made this a better trade? Again, it's the reason I think journaling is so important for traders. Because you will learn a lot of stuff about trading by journaling. You'll look at these trades like these macro pullback trades, and you'll say, okay, macro pullback, trend line bounce, maybe we'll go in and try to take advantage of this one. Is the NQ poised to head higher? Maybe, maybe not. Is it worth a onesie? Can I cover it to here? Is it worth $135 to give that a poke? All right, now it's into yellow bars, so I don't even need to worry about it. But you'll start to see patterns in your trading. You'll see patterns in how you do things. Good patterns and bad. Yeah, see, Dustin's already picked up on something. Dustin writes, I've been trying to get to break even as soon as I can get a full bar closed in the direction of the trade. I don't know how many trades I've been in that have lingered sideways for 2 to 4 bars and end up smacking me for a full value stop. Excellent observation, Dustin, and it's true. Like we've identified the sideways range, right? We knew the market was range bound like so. We're outside of the range. We got the breakout, the retest, the breakout. This should continue higher, and yet look at what's going on. We're back inside this trading range. We're back with yellow bars. So you know what? I agree with Dustin. I think we might see the market put up a little bit here, fail again, and get out. Like head the other way, I mean. And as you know, Dustin was pointing out, if he wasn't more aggressive with his stop when the market gave him the opportunity to do so, now you would be wringing your hands saying, oh crap, how am I going to get this trade to break even at least? You'd be happy with a break even trade. Remember that too, those times when you're looking at the tick value go by and you've got 50, 60, 80, 90, $100 and you're saying, should I take the $100? Remember those times when you're wishing you could get the trade back to break even. Those times that you passed on a $100 profit. All right, let's put that back on the shelf. I'm not too excited about the NQ here at the moment. Soybeans still stuck sideways. Crude oil put a little run into the upside, but I don't know if I'm going to be a buyer just yet. Big downtrend in crude oil today. Our late filter entry here kept us out of a potentially bad trade. Or sorry, late filter entry, second push entry. Something to bear in mind, this does happen on the Eagle almost all the time, where if you break a little itty bitty trend line like this, the market will come in for a bar or two and then start to reverse on you. So you can wait for that second push on the entry. This is what still looking like a bear flag to me. This is what it's looking like at the moment. We did break the hard edge. We should see some sort of reaction here still. So, like I said, not 100% sold that crude oil is turned over into a bull market just yet. All right, well, it doesn't look like there's a whole lot going on at the moment. Excuse me just a few moments. I'm going to go get myself something to drink, and I will be right back. So, was that an expensive coffee break? Nope. No, not much going on. Not yet. Boy, oh boy, they really have slowed down. All right, here they are. They're making that second attempt off of these yellow bars, something resembling the trend line bounce, but we'll see if they don't fold over here and head the other way. The hawk, such a mess today on the NQ. Oops, here they come again. As you know, I'm not a fan of trading yellow bars, but I'm curious because we did have something resembling a trend line bounce. There they go. Yeah, they would have made it. Just barely, but they would have made it. Okay, soybeans getting a little bit more active also. Fred's asking, do you evaluate the E-mini, the YM, or the Russell? Yes, I do, Fred. A lot of times I will have the E-mini running also. Let me put the E-mini on my other chart. I'll drag it over here. And normally the stock market and the NASDAQ move in tandem. So, you know, a lot of times you get a lot of duplication. There's nothing wrong with watching companion charts. Sometimes, you know, you'll pick up clues from one over the other. You guys no doubt have heard me mention Marsh Jones in the past. Marsh developed actually a trading system, not with charts, but with watching the time and sales. And he would watch the time and sales for the NASDAQ and the YM, and if he saw a coinciding spike in the NQ and the YM, the Dow, he knew that he had a couple of seconds to place an order in the E-mini to buy or sell accordingly. And I don't know why I just pulled up the euro. What was I thinking? There we go. Because he found that the NQ and the YM were actually leading the E-mini, but only when they were moving in unison. So there's a little tip for you. You can actually watch the NASDAQ and the Dow, and if both those make a spike, either higher or lower, what Marsh would do is he would just throw a market order in on the E-mini. And Marsh had relatively conservative profit targets. You know, he wasn't looking for home run trades. I think a big trade for him would have been 8 ticks, which is still nothing to sneeze at, right? That's $100 per contract, of course. So here's the E-mini S&P on our Falcon tool, and the E-mini, or any instrument that trades at more than $10 a tick. The E-mini, of course, trades at $12.50. I changed the bar styles, the mean wrinkle bars, from the default 6 Hawk, 8 Falcon, 12 Eagle to a 4 Hawk, 4 Falcon, 6 Eagle. It's just because if you go with the default brick sizes, your sessions aren't going to be large enough. You're going to have daybreak lines everywhere. You know, that's going to be a day, and then this is going to be a day, and you won't have anything tradable. So if you are looking at a market like the E-mini or the Euro or anything that trades more than $10 a tick, you may consider dialing down your brick size to the 446 setting. Marsh Jones. Dustin is asking, what was Marsh's name? Marsh Jones. And you can see so here's the E-mini on the Falcon. Let's take a look at the E-mini on the NQ. Kind of the same. The E-mini had a little bit more of a spike there. The NQ showing us a little bit more of a breakout already. Sometimes I'll also run a bond chart opposite my index charts, because the bond market does have a tendency to move opposite of what the stock market is doing. They also say that the bond traders are the smartest traders in the world. I like to think so. I used to trade the bonds a little bit. But regardless whether they're the smartest or not, if you see a spike in the stock market, not so much the NASDAQ, but certainly the YM, the Russell, and the S&P, and the 30-year bonds are not going the opposite direction, the move probably will not last. Now, of course, none of this stuff is written in stone. Sometimes the move will. Sometimes you'll actually see the bond market and the stock market move the same direction, but generally speaking, there's an inverse relationship between the two. So if the stock market is going up, bonds should be coming down. And on rare occasions, you will even see the bond market lead. Very, very rare. But sometimes you will see the bond market fall off and the stock market hasn't moved yet. So you start scrambling for your mouse and just start punching in buy orders, because you know it's very likely that the stock market will rally. and vice versa, of course. Oh, and while I was chatting away there, I missed a very nice late filter entry signal here on crude oil. This one right here. Notice filter does not go out of sync, or sorry, tripping over my words today. Filter goes out of sync, trend line does not go out of sync. Signal comes back, market goes higher. This is also a good example of when you have a winning trade in a particular direction, you might want to stay with that direction that day. So in this instance, we had a winning buy trade here. A lot of times I'll make a note of that in my journal, and I will just forget about any selling opportunities. You know, show me a sell signal. Okay, fine, it's a sell signal, like this sell signal we had here on the Eagle, right? Hard edge bounce. People are going to be writing me saying, Eric, why did this signal not work out? Well, it probably didn't work out in part because we had a very good buy signal on the Falcon. Right? That was kind of showing us an early shift in the bias of the market. The other thing you need to be aware of here, of course, is that a reasonable test of the extreme? Well, yeah, I would think so, but obviously crude oil has other ideas because now we're up to here already. This is a much better test of the extreme, what we're seeing now. And no doubt we will see crude oil try to turn over. And whether they retest this area and bounce higher, or whether they fail and head lower, well, that's anybody's guess at this stage. So it's looking like, as far as crude oil is concerned, we would rather be buyers than sellers. And as far as the stock market is concerned, look at this. We're starting to get that other peak building. We're back into yellow bars. Does this look like a market that is starting to unravel, or what? It's like there's no more buyers left. I'm not sure we're going to see it during this morning session, but if you're looking at this market this afternoon, I think there's going to be some selling opportunities here. I think we could see the NQ fall. Let's take a look here. Well, let's go to the Eagle. Oh, look at this. Our trade forecaster says we're in trend mode for 146 minutes. So for the better part of the next couple of hours. Of course, that doesn't necessarily mean that it has to trend higher. You can see the market is struggling, but it does look like it's teeing up and saying that for the next little while, we could be experiencing some sort of trend. And I'm thinking, well, 44.20 might be reaching, but maybe the top end here, 44.30, that would be a very substantial move to fall from 44.60 to 44.30. 20 full points in the NQ. You heard it here first, folks. We're working on an early trend change signal here in the Falcon. It's about the only tool giving us an opportunity at the moment. The nice thing about this early trend change signal is, of course, you can cover them above the high, right? We can cover it way up here. And what I can do is, because this is a little bit of a riskier trade, we can just kind of throw a onesie on it. And we don't even have the order yet. I'm anticipating the hash mark printing. We still just have the warning dot. But this tested the extreme here, this possible failure. It won't be a full-on failure until we get below here, below 44.56. So I am getting a little on the aggressive side here. But I'm sure that they'll come to see things my way very shortly. It's right on the cusp. You see, one tick higher, we get a green warning dot. One tick lower, we get a red warning dot. Oh, look at that. They're bouncing off the trend line yet again. Those yellow bars keep nixing the trade for me, though. Come on. The E-mini actually looking a lot more bullish right now than the NQ. Well, maybe a lot is a strong word. A little more bullish than the NQ. The E-mini actually looking very range bound, isn't it? A lot of yellow bars through there on the hawk. Looks like the eagle gave us a nice buy signal out of the open. This hard edge bounce, red bar buy. Have we found our profit target yet? Maybe. No, not quite. Suncom says the Russell looked better. It's true, the Russell will tend to be a more attractive market like that sometimes. Ooh, and here we are with yet another late filter entry signal. We don't like to see too many late filter entries within a trend. It does eventually show weakness if we keep printing late filter entry after late filter entry. It's not always a sign of strength. Although this time I think it will be. All right, well, we've got conflicting signals here, so let's take a look at the E-mini. I haven't done an E-mini trade. Not a late filter entry, but a trend line touch. Let's see if we can take it above the high, cover it there. Oop. I need to adjust my profit objective because this is the Falcon. And you know what? The market is still range bound, so why don't I dial down the risk a little bit on this one? Why ask for trouble? I'm going to let this order sit here for just a moment. Nope, they're going to go higher, so I may as well cancel. Beating up on those highs again. Crazy. Crazy NASDAQ traders. Well, they got turned away here before, didn't they? So we'll see whether or not the market turns on its heels again or whether there's actually some follow through on this next breakout. Right, so this is the level we're watching. They've broken it ever so slightly. Here come the sellers. Now let's see whether the buyers really can pull it off. And let's see where the profit objective would have been on that late filter entry target. Oops. So that's what we would be expecting to see. See, I should have stayed with plan A. I looked at shorting it. All right, so there was that late filter entry signal. It seems to be struggling. Here's a red bar buy coming in. Ooh, it disappeared. Let's see if we can't get that back. Okay, so there's a red bar buy. The nice thing, of course, about the red bar buy is it does give us an opportunity for a counter trend signal. Come on, red bar buy. right, so this late filter entry signal looks like it would be close to failing. We would have our stop below here. I'm removing it because I'm actually more interested in trying to sell this market than buy it, and I'm looking for a good place to get in. We still have this trend line here on the eagle, which will no doubt give us some sort of support, so this is not without some degree of risk. See, we're probably going to encounter a trend line somewhere around 44, 57, 58. See a little bit of a bounce higher here on our Falcon, which is going to give us our complete or second phase of our trend change signal. We have the first part. We have the trend line changing color. Now here should come the up portion and then the down portion, which will complete the sell signal. If in fact the market is prepared to do that. And here we go with the red bar buy. Come on, get up there. We just have the warning dot. Come on, get up there. Don't you dare run away on me. All right, so there's the trend line. Where are the buyers now? Show me there's some buyers there and I will jump all over them. And there they are. The E-mini actually giving us a first micro-macro cross signal to the upside. Still well within this trading range, however. Not making it the most inviting signal. Not yet. All right, this is probably going to build into a first micro-macro cross. Still waiting for this to build into a trend change signal. If it runs away on me, I will be right choked. Oh, you stinkers. So, we saw this setting up. I was waiting for a signal to print. We didn't get it, probably because the market was taking too long to come around. This is actually very rare. This does not happen that often, that we don't get some sort of signal printing here. Okay, well, big move lower in the NQ. No real surprise. Don't worry, we will have another chance to get in on this. Might have to wait for a little bit of a pullback though. Probably see some profit taking, probably see the market come back here to, I don't know, I'm thinking 44.56, thereabouts. That should generate either a macro pullback signal or a first micro-macro cross here on the hawk. Should also get a possible trend change signal here on the eagle, and as well as the falcon, and the raptor for that matter. But yeah, that's rare. That is rare. I've only seen that happen a couple of times, that none of the birds will give you a signal. Now, of course, you can always use your own judgment also. We did see the market falling apart. Joe's asking, you would think the hawk would give you a signal before the falcon does. Typically, that's the case. But just the way the bars unfolded, just the way the programming is structured, it didn't. Nothing really, all the I's were not dotted, all the T's were not crossed until, of course, it fell off. Well, crude oil not doing a whole lot lately. It's kind of sideways. The E-mini also sideways. I should go back to see if soybeans have finally broken out of their range or not. Yes, soybeans have finally emerged from their trading range, so things are looking a little bit more bearish for the bean traders. crude oil may be working on a trend change signal after their recent rally. See, our trend line is flipped over. Definitely worth shooting a trend line across the bottom here, I think. Well, folks, it's slowing down a little bit again. I think if you're going to be trading this afternoon, you can definitely anticipate the NQ to fall off some more. Same thing with the E-mini if you're following the E-mini. I suppose it would be true across the board for the stock indices. Crude oil still in an uptrend, so don't get too excited about selling it. However, if that trend change signal does roll over, it might be an opportunity for a little bit of a short-term move lower. But for the most part, I think crude oil happy to be pushing higher today. I think we're going to button up the room just a couple minutes early, unless anybody has any questions. Remember, if we get a little bit of a pullback here, there is still time to sell. So even though we've seen this big move come down, there is going to be another opportunity here. We're actually working on a first micro-macro cross signal right now with the NQ, but don't be surprised if it works itself into a macro pullback. Okay, you guys, we'll see you tomorrow for our Friday session, and we'll talk to you then. Bye for now.